In today's video, I want to take a few minutes, actually as much time as it takes, to help you understand what it actually is that I do and why I do it, and the benefits that you can get from investing with me. And of course, first of all, if you don't know who I am, my name is Kent. I am a fund manager, and I invest a small boutique 3C1 investment fund. Yes, it's an investment fund. No, I don't live in New York, and I haven't gone to school for 8 years to be a fund manager. That's actually one of the questions I got yesterday. I was sitting across the table with somebody at a function, and you could see his eyes open wide when he heard what I do. And then the questions came about Series 6 and investment advising and all these things. So I realized most people don't have a clue what I do or how it can benefit them. So I want to take really as much time as possible. This may go 15 or 20 minutes, but I want to take as much time as possible to help you understand what it is I do. Like I say, I run a fund. I invest in my own fund. I'm out there with some friends of mine who are fund managers from all across the country. We come together once a week and we vet deals together. So the first thing, if you invest with me, I'm going to use the whiteboard because I like to do that. Number one, the first thing you're going to get is access. And it's access to alternatives. Now, that may not sound like a really big benefit, but if you don't run with the right people, if you're not in the right circles, you're not going to learn about some of the best investments that are available out there for accredited investors. So let's get that out of the way right now. My fund is only accessible to accredited investors. If you don't know what that is, Google it. But an accredited investor has the funds to be able to invest in these things. Some of the minimums we invest are around $50,000. Occasionally it'll be more than that, and occasionally it'll be less than $50,000. But that's what you get first and foremost is access. So access to alternatives, we're talking about, yes, one of the hottest things over the last 10 years has been apartment buildings. Yes, we see apartment buildings, but honestly, I haven't brought an apartment building deal into my fund yet. We see access to oil and gas deals, which we did last year. We saw a marina deal. We saw a fintech startup, a disruptive private equity deal. Now we're looking at another business roll-up opportunity, private credit, which is just making safe loans to different types of investments. We're doing all kinds of deals, and that's how you get access to it, is by being a part of my fund. The second thing that comes with this, not only are you getting access to alternatives, these are not just any deal, these are vetted deals, okay? So the reason my investors love investing in my fund is I don't bring deals that haven't passed a series of background checks and due diligence searches, and that's not just me. First of all, if I were dependent upon myself, I would run because I don't know enough detail about all these asset classes. I know the operators well. I know enough to do some beginning legwork on these deals, but when it comes to really diving in, I trust other people as well to help me vet these deals. So I don't bring junk into my fund. I'm bringing well-vetted deals that I believe in operators. Sometimes we will take a risk on an operator if the asset class is something we're really interested in, but most of the operators they've been around the block a time or two. They've done several deals. They've gone full circle on these deals, and that's why we like them. The third thing you're going to get from a benefit of being in the fund is true diversification. Now, you've heard this word, and a lot of your stock market guys use this word, and when they say diversification, they're talking about your stock portfolio, your bonds, your mutual funds, and then energy and growth and income and all that. They've brainwashed us into thinking diversification looks like that inside your 401k. True diversification, true diversification comes from this book here, and it doesn't really come from here, but if you want to learn about true diversification, what the wealthy are doing with their money in order to truly get uncorrelated diversification, and I should have said that, uncorrelated from Wall Street. You need to be uncorrelated. At least a portion of your portfolio needs to be unlinked to Wall Street. And Tony Robbins talks about it in this book called The Holy Grail of Investing. He talks about 8 to 12 different asset classes that are uncorrelated to Wall Street. We're talking about the things I just mentioned, oil and gas, energy. We're talking about private equity or lending, or private debt, which is lending, private equity, which is small businesses. We're talking about startups. Obviously, real estate's a huge one, and you're going to diversify across those. My goal is to achieve that in my own portfolio, and you can benefit by doing it along with me. And that's how you get truly diversified. Now, this is one of the side benefits that that come along. Let me check my notes here. Is improved economics. Now, what does that mean? Well, if you're not investing in alternatives, you don't understand how these deals are how they pay. But one of the things is when you come into a deal, if you come in as an individual, they're going to tell you what the expectations are, what the rates of return are, how they're going to split the cash flow, how they're going to split the money when the deal sells if it's a property. And those are the economics. And typically, if you go directly to an asset operator, they're going to offer you a certain class of economics. Typically, they'll say my minimum is $50,000. If you'll do $50,000, I can pay you 6% here, and then at the end we'll split it 50-50. That might be the economics of a basic deal. When we go into these deals, we tell them, hey, we really think that our investors can bring $500,000, maybe $1 million or more. And because of that bigger check size, the sponsors are willing to do more for us. Now, it's not just me and my fund, but you have to realize I'm working with other people and other fund managers, and they have investors as well. And when we come together, we may be able to raise as much as $2 or $3 million. Now, the guy that was going to give us a 6% preferred rate of return, and he was going to do a 50-50, now he may give us an 8 or 10% preferred rate of return, and he's going to split it with us 60-40 or maybe even 70-30. So these improved economics are what benefits. And a lot of people say, but Kent, aren't you taking those preferred? And not really. I typically split these with my investors. So whatever benefit we get is coming in as a group. My fees and my improved economics come out of that, and it ends up not hurting my investors. They actually do better than they would have if they had gone directly and invested themselves. So number 5, one of the things when you're in alternatives, the best deals kind of go fast. And you're going to get early access to some of the best deals out there. I'm out there masterminding with some of these sponsors and some of these deal operators and other fund managers, and I hear about deals that really don't even hardly ever go public. And that's what happened with our fintech startup a couple weeks ago, probably a month ago. We got access to something that nobody knew about. And I shot maybe 1 or 2 emails out because we were under an NDA. And if you didn't answer one of those emails, I didn't bother you. And the people that did got access to a really cool fintech startup that could, we don't know, but it could hit the 10x to 15x range on the return of investment. So by being a part of my fund, you get early access to those kind of things. Let's look at number 6. Number 6 is pretty easy, I think, higher returns. Now, you may be in a group of people who think alternatives are too risky, and the high returns are because they're so risky, and people lose money in alternatives because of the risk. I'm here to tell you, if you know how to do your due diligence, if you do it as a team, if you really uncover as many things as you can, risk can be mitigated, and there is not a absolute correlation of risk and returns. What we're trying to do are find asymmetric returns with no added risk, and you can do that in alternatives. The reason you can do that is real estate and most of the alternative market is what's called an imperfect market. So when a market is imperfect, there is nothing out there that kind of standardizes it. The reason you can't flip a stock and buy it for $50 and sell it the next day for 80 is because the market is perfect. We always know what that share of stock is worth. There's this market that tells us, it's a system that says today it's up $2, tomorrow it's down $3. There's a perfect market. You can always press a button and sell a stock, but when you're in alternatives, we enjoy what's called an imperfect market. Sometimes you can buy something right. If you could buy stocks at a 20 to 30% discount than market, I would tell you to go crazy in the stock market because it's on sale. But we don't ever see that because the market is always perfect. So imperfect markets lead to higher returns. We can get asymmetric returns on our money with no added risk. And if you don't understand that, I would love to talk to you more about that, but it is absolutely true. And the seventh and last reason you should invest in a fund is for tax efficiency. And if, hopefully I got that right, yep. Tax efficiency. The reason we invest in these assets are just about all of them, not all of them, but just about all of them have some tax benefits, especially in the real estate sector and especially in energy and oil and gas. You can solve a lot of your tax problems by making strategic investments in alternatives. I don't know that you can really do that in the stock market. You're going to pay capital gains on your stocks. And guess what? And if it's not, and the reason they get you and the way the government kind of gets us into 401ks and government sponsored plans are the taxes. They've kind of got us, right? So you're probably saying, I don't pay taxes, Kent, because mine's in an IRA or 401k. Well, you're going to pay those taxes someday. Okay, if you're in a 401k, you're going to get taxed someday. If you're in a Roth IRA, yes, I'll give you that. But your money is still tied up. And if you're in a self-directed Roth IRA, that's great. I'll give you that. That's where you should be. But tax efficiency is really key. You can hear what's going on in politics right now. They're talking about taxing unrealized capital gains. Oil and gas deals can zero out capital gains if you make the right investments in the right vetted deals. And you'll hear people say oil and gas is really risky. I've made some oil and gas investments. My investors have too. We enjoyed a great write-off, and we're seeing good, consistent cash flow. So hopefully this kind of tells you what I do and why I do it. And I'm investing in these assets anyway. My thought was, if I'm going to do this, why not create a fund, let my friends and family and other investors invest alongside me in my 3C1. What's a 3C1? It's a special fund created with the Investment Company Act of, I think it's 1940, where they said, I'm exempt, but I can have myself and 99 other investing entities come alongside me inside a fund, and we invest into alternative assets. We just crossed the $1 million mark this year in assets raised and allocated. So I'm tickled to death with that. We are over $1 million, and actually this week I'm heading out to Portland, Oregon, to a conference of other fund managers. We're going to get together. We're going to learn and strategize and get on the same page with some of this stuff, because the returns are powerful, especially when you're looking at going into a recessionary environment. We all feel like something's not quite right with the stock market. We've got elections coming, and I'm suspicious of what might happen after the elections. We've got interest rates that some people think should be lowered. We still have inflation, but alternatives can help you combat all these weather these economic storms that are out there. We're constantly having to figure out how to navigate this. I would implore you to get a portion, if not half of your money, away from Wall Street into some real tangible assets that you can go see, go visit, or you can at the very least understand how it makes its money and generates cash flow. And that's what I do with my fund. Again, we have room in the fund still. I don't have to close it until we hit 99 investors, and there is a maximum amount of money, but I don't think we'll hit that. But anyway, if you want to know more about investing with me in my fund, just comment below this video or reach out. You can check me out at kentleach.com. That's KENTLEACH.com. and we can talk more about these benefits of investing as a group. The cool thing about my fund is I go out and search for deals and bring them to the fund investors. As a fund investor, you get to see the deal, you get to ask all the questions you want about the deal, vet the deal, and you have no obligation to invest in that deal. This is not what's called a blind pool fund, where everything I bring you, you're automatically invested in it and you have to invest in things you don't like. So if you just don't believe in mobile home parks, you hate mobile home parks, you never want to invest in one, if I were to bring one into the fund, I would show it to you and you could say nope, and you just go on your day, about your day. So each deal that I bring into the fund, it's available for some, 2 to 4 weeks. We raise money for that, and after that period of time, we move on to the next asset. My goal is to bring about anywhere from 8 to 12 investments in front of my investors every year, so they have the opportunity to start assembling that true diversification that we talked about in Tony Robbins' book, The Holy Grail of Investing. If you haven't gotten that, I think it's a great book. I'm not the biggest Tony Robbins fan, but I have read a lot of his stuff, and this one impressed me. Some of his other stuff didn't on economics, but I think he hit the mark on this book. So that's why I'm kind of patterning this fund about these asset classes. And some of these asset classes you just really almost can't get access to unless you're with a group of investors who can bring that $500,000 to $1 million check. So that's why I created the fund. It helps me too. Me investing alongside you gets me improved economics. We benefit together, and we get to see some really cool deals and be part of some awesome opportunities. So I hope this video helps you to understand what I do. If you want to know more about my 3C1 fund called the Hickory Creek Smart Flex Fund, just reach out. We can talk about it, see if it's a good fit for you. Go find out if you're an accredited investor, if you don't know yet or not. And we can talk after you reach out, and we'll set a time to talk and look at where you're at. We need to look at where you're starting from and where you want to go. And it's almost like a prescription. I like being able to see the full picture of where somebody's coming from, where they want to be, and what does the plan look like to get there. So I hope you have a great day. I hope you enjoyed this video and it answered some of your questions.